Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions is Jean Pierre Verster from Protea Capital Management and Gary Booysen from Rand Swiss. Do send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. We were high off a few things in September, but seeming that October isn't starting off very well. Yeah, Gary, are we off the high now, or do we have a little bit of a hangover?
Well, we were basically flat today, so no huge moves. So I mean, we were up basically 9 basis points on the top 40. Resource index is recovering strongly, though. So the resources are up 2.53%, and I think that was led higher by the gold miners. So part of this is just a weakening of the dollar index. So we've bounced off that $100 handle, or at least the 100 handle, up at above 101 now. But the gold price has actually stayed a little bit higher. So you're getting kind of a lot of excitement around Anglo Gold, Goldfields, Harmony, etc., which has helped to lift that resource index. But industrials, financials down over 1%, industrials down kind of 0.1%. So not a lot going on, but you just feel like we're in a very heavy data week at the moment. We've got that non-farm payrolls number out on Friday. We've got a whole lot of PMI numbers coming out. We saw European inflation this morning as well. And you get the sense that the world feels like it's slowing down, but it just is hoping that loose money is going to solve the problem and drive markets higher, I guess.
Well, one of the things, of course, that markets were getting their cheer from was the stimulus in China. And I'm actually going to go into the question that asks about that. With all the real stimulus now in the Chinese economy, well, I'm not sure if is it in the economy? Actually, there's a question. Is it actually in the economy? Because there are also some things where it's rumors, and then people are waiting for the Chinese authorities to actually confirm. Yeah, JP, just talk to us about that.
Well, as far as I know, they have opened the swap lines where financial institutions can borrow from the central bank and effectively buy shares. And that's part of the reason why we've seen such a sharp rise on the Hong Kong Stock Exchange, Shenzhen, Shanghai. So there does seem to be already some money filtering in, yes, into stocks at least.
Okay.
For the money to go into the economy, might take a little bit longer. Some of these are social safety nets, you can call them, and that will take longer to filter through people and increasing their confidence. Then finally them saying, okay, let's go out and buy that second apartment or that motor vehicle. That will take a while.
All right. Well, let me then take the second part of that question to you, Gary. Would the Satrix China ETF be a good place to put some cash into? I know that the ETF has run a little already.
Yeah, so I'm just pulling it up at the moment on Morningstar, and it's a gold-rated 4-star ETF. It's been kind of top quartile performer on 3 years, 1 year, and year to date, and 3 months, and second quartile over 1 month. So it looks pretty good. I mean, but of course this is going to be very determined by the fate of Chinese securities. And as Jean Pierre was saying, Chinese authorities want markets to go up, and they're opening lines so that people can buy securities directly, markets will go up, and of course the performance is going to look great. I think what you've got to understand when buying into, I suppose, the Chinese market is that it is very, very opaque. I mean, we did a deep dive into PDD recently, which is essentially the owner of Temu, and when you look at all the cross-holding structure, to actually work out where the value is very, very difficult. A lot of their securities are very, very cheap compared to in Western terms. But at the same, the opaque nature of their market does leave something to be desired, and you do have to allocate a risk premium to investing in China. Of course, you also do have demographic problems in China longer term. So yes, potentially securities have been too weak. The stimulus and the measures that the Chinese authorities are putting in, and it's not just kind of opening the lines. There's a 50 basis point triple R cut. I think they've also there's some other measures as as well, just to go in and support their banks. This is going to lift it in the short term, but longer term, the Chinese working age population has peaked, and what do they say? Demographics is destiny. So eventually, this Chinese market is going to come under a lot of pressure, and I suppose it comes down to your valuation and your risk appetite.
Well, actually, JP, I mean, you've said that there is some money starting to flow in. Do you go in now while all these announcements are happening and things are starting to flow, or do you actually wait until the good news starts filtering through to real economic data where you can actually see that the stimulus is actually working?
So it probably depends on your approach towards investing. And my approach is more valuation based than anything else. So I would say that the starting point is a very cheap valuation. So if you can get an improvement in sentiment, which I think has been sparked by these regulatory interventions, that's very positive to potentially have share prices move closer to valuation, which I believe is higher than the current share prices. So that's a sentiment goal. And then the interesting thing, there's a reflexive feedback loop. So when people are more optimistic, when sentiment is higher and more positive, that can lead to better fundamentals. It leads to more spending in the economy. It could stabilize property prices because there's more demand. And all of those then feed back into the economy, stronger fundamentals, that feeds into stronger confidence, and then becomes a self-fulfilling prophecy. And you have a very strong upward move in markets. So that could very well happen. And because the starting point is a cheap valuation, I would say that one can get involved. Potentially, you should have already been involved, but it's not too late, I think. And because of the starting valuation, I do believe that a reasonably large allocation to China could be a good idea, including via that ETF. As far as I remember, it's quite concentrated in the likes of Tencent and Alibaba, Meituan, and some of the big tech shares. But that's probably exactly where you want to be, because they all will benefit from higher consumer confidence and spending.
All right. Well, let's get into more questions. Going into Aspen. Is Aspen an SA Inc. stock or offshore investment? Not on the upward trend with the exchange rate. So clearly some things that the investors has noticed there, that Aspen is maybe not moving the way that it should be moving. So how do you actually view the stock? SA Inc., Gary, or more offshore?
I think it's a great question, because the manufacturing facilities of Aspen, they've got huge manufacturing plants down in the Eastern Cape, but they sell their product internationally as well. So if I look at 2023 revenue, developed Europe accounts for 36% of their revenue. Africa, Middle East, only 21.5%. Selling across Asia, Australasia as well. If you go and have a look at the Aspen chart, you'll see obviously that big sell down, the sell off at least that is represented there. Now, part of the reason for that was actually its exposure to China specifically. So we were talking about China earlier, and that essentially what was happening is the Chinese authorities wanted to see cheaper drug prices. This impacted Aspen's earnings far more than people had expected, and the share price reacted very, very negatively. As Jean Pierre was saying, if we do see this sentiment shift and it becomes reflexive, at least maybe we will see a recovery in Aspen share price. I think at these levels, I do like Aspen, but whether it's local or offshore is international. I would say it's offshore, but I mean, having traded the counter for years, it certainly doesn't behave like the typical dual listed or rand hedge security, something like something like a Richmond. Often those, if you get a big weakening in the currency for the day, you'll naturally see the rand hedge stocks going up, and often Aspen bucks that trend just on a day-to-day basis. So it's interesting. You would think of it as an offshore because of its revenue base and where it sells, but the actual security doesn't trade like a rand hedge.
Very interesting. JP, how would you be looking at Aspen?
Well, they do have a significant subsidiary called Aspen Global. So I would refer to Aspen as being a global business with some significant South African operations. So I think Gary has mentioned some of those splits. There's some significant operations in South America as well. So yes, well diversified, a lot of debt offshore as well. They've done a good job recently in matching some of their debt more closely to the same currency that the revenue is generated in. So it is not a pure SA Inc., neither is it a pure rand hedge. It's a bit of both.
Okay, okay, quite mixed there. All right. Let's go into Roinet, the view on Roinet at current levels. I've actually been wondering about the stock because, for example, you look at Mastek, which has a renewable energy division, which actually didn't do that great because we don't have load shedding anymore, and so people aren't, getting solar panels anymore, and focusing on that renewable energy source. In terms of Roinet, because it was the favorite when we had load shedding, Gary, has been on your radar at any point this year?
Yeah, so it's not a stock that I follow closely. Obviously being quite a small, I say small, but it's not actually that small. I mean, sitting at about 15 billion valuation currently. But as you say, a massive run up from kind of mid 2022 up to the 8.50 handle that we have at the moment. In terms of its earnings, not particularly cheap. But as we get, I suppose, more and more optimism around the domestic market, to have an engineering company here, and with exposure to kind of communication technology, it might not be bad. I mean, we've seen a huge run up in kind of the small and mid caps, far outperforming the top 40 over the last sort of, let's say, 4 months. Is it starting to get a little bit toppish? It's very, very difficult to say. And like I said, I don't follow the company closely enough to kind of discuss it at a fundamental level.
JP, is this one that you look at?
Yes, decent quality business. They make electric cables and other elements that go more into the wholesale distribution of electricity rather than the last mile, although through CBI, they also have, the type of things you'll see in your DB board, your distribution board at home. So they do benefit from more spend on electrification. Yes, the last part of electrification, which has seen a lot of spend till a few months ago, being the solar systems, but also from municipalities. It will really benefit them if we see a kicker in municipalities upgrading and properly maintaining the electricity infrastructure, which is something we need. So they'll benefit through that. They also do some office automation through Nashua. Just general business confidence and business activity will benefit that business. They also are in telecommunications, voice over IP, and a few solutions. Again, that's very much linked to the general business cycle. And then they've got a defense business, which is doing quite nicely, where they export, things that are used in weapons and radar. So India is a big market for them. And with the growth we've seen in India, and India fixing its own economic and military muscle, that has benefited Roinet as well. So you put all of that together and a track record of very good capital allocators, a very cash generative business, mostly because of the low cost of the cable part of the business, then I would say, yes, Roinet is a very decent business that one can certainly look at.
All right. Let's get into more questions. There is a question here on transaction capital, and specifically for you, JP, if you are positive on transaction capital. I know you have been in the past. What's your feeling right now?
Yes, so the shares have just about doubled over the last year. If you also adjust for the We Buy Cars unbundling. So things looked terrible a year ago. But if you look through the detail, you would have seen that the issues are with SA Taxi, and it's relatively ring-fenced. And the recent announcement they made is effectively to say they're going to cut the cord. They're going to sell control of SA Capital to a previous investment management executive, a previous CIO of a business, his family trust, and the management of SA Taxi. They did say they're going to put in a little bit more money, though, to make the business sustainable. So we're just waiting to get that slight detail. How much is that little bit extra they're going to put into SA Taxi as they sell control? I would hope it would not be too much. It will be, call it 100 million rand, if so much. Let's see. And what is left, basically, in transaction capital is then Newton, which is a very decent call center, debt collector type business. And it is much smaller. They are going to change the name now to Newton to reflect what the business is going to be. And that is then going to be the business going forward. So it is going to be a small cap. It mightn't get all the attention from the market. I was actually hoping that the Newton management team also do a management buyout. Maybe in future they might do that if the share price languages. But I think the share is cheap if you just look at the profitability of Newton on its own.
All right, yeah, very, very cheap. Gary, do you have a view on transaction capital at this point with all that's happened?
No, I think Jean Pierre has covered it in more detail than I can.
Well, let us go to AVI because somebody's asking about AVI at the current levels, Gary.
Yeah. Again, at the current levels, if you just look at the stock price, you might think that this looks expensive because you've had obviously an incredible run up this year. I mean, it's up 33% year to date. But if you actually look at earnings terms, it's not particularly expensive given its history. So, I mean, it's trading currently on a PE of around 14. And if you look at kind of estimates going out, kind of 1-2 year estimates, you're looking at, kind of the same. So not particularly expensive. I think also given the part of the cycle that we're in, obviously it's got, brands like Green Cross, Spitz, Kurt Geiger, etc. And I think with interest rates coming down, you're going to see a huge tailwind to a business like AVI. AVI has always been incredibly well managed as well. It's always commanded a premium in its sector, and I think it deserves it. And not, even with the run up, not looking particularly expensive at the moment. So yeah, even with, the trader in me always says you don't buy into a spike like we've just seen.
Yeah.
But in earnings terms and fundamentally, it doesn't look particularly expensive, especially considering that we're looking for, I don't know, probably like kind of mid-single digits growth in earnings in the next reporting period.
Yeah. Well, actually, on that, there was also another question on Rhodes Food. Gary seeming quite positive on AVI. Rhodes Food, JP?
Yes, quite a bit smaller than AVI, not quite as high quality. AVI has got some excellent food brands and then some retail brands in I&J as well. Rhodes Food Group, their canned fruits and the Rhodes brand is strong. It is good. They've also got some other brands in pies and processed meat and a few others. But then they've got this fruit pulp business that they export, and that is very volatile.
Yeah.
And if you go back a few years, it was very profitable. Then they went through 3 or 4 years where it had a very tough time. And then last year it did well again. And then most recently, it again had a tough time. So sure, it's very difficult to forecast that export business. And that's why if I had to choose between the two, I'd choose AVI. It's a higher quality business, better brands. And Rhodes Food, you can probably wait till that export business is loss-making and people are very negative about it and it trades close to NAV, like it did not too long ago, I think about 6 to 9 months ago. And that's an opportunity. But for the long term, I think AVI is the better company.
There's also another question, still in food there. Premier, is it a good buy at these levels? Does it have legs to go further? Gary?
That's a good question, and you're probably asking the wrong person. You should be asking Anthony Clark about this one. It's been his pick for a very long time. He's done incredibly well out of it. My sense is that a business like Premier, it does benefit from falling input prices. So if you look at kind of what's happened to maize prices, sugar prices, etc., they have managed to expand their margin. Obviously, also with the lack of load shedding that we've seen in the system, that's also feeding into the business and helping to create a little bit of a tailwind. Targets at the moment, like I said, I'm probably not the guy to give you the targets, but yeah, it looks good at this stage. So yeah, probably buy. But I think we're running a webinar on it tomorrow night, so that's where you'll hear all the juicy gossip, not from me.
All right. Well, let's go into talking about juice. Let's go into oil and chemicals. Sasol, quite a few questions. So the first one, JP, Sasol, has it bottomed out, or do you expect the share to drop lower? Should I cut my losses and sell? I purchased at 172 Rand.
Yeah, Sasol, the gift that keeps on taking.
Yeah.
That is what Sasol is. It takes your profits. And look, it's a very tough space. You get a little bit of a blip in the oil price like now because people are saying maybe Iran is going to load some ballistic missiles and point them at Israel. And then if that doesn't happen, then people say, oh no, we've got more than enough oil, and then oil drops. And yeah, but over the long term, again, if you add in the gas challenges that Sasol has, it really is a very tough business. And you can see, coming to the not too long before the end of life of Secunda, environmental challenges. The US went a bit pear-shaped when they tried to diversify it into chemicals. And then the chemical they diversified into is effectively into plastics. And that was also a negative environmental type of product that people are also questioning whether it is the preferred packaging. It might be cheap, but maybe the total cost cradle to grave is a bit higher. So no, it's almost, and I've said this before, I see Sasol as a value trap. So no, I would cut my losses. I would not invest in Sasol because I don't know if Sasol is going to be around 10 years from now.
Gary, you are nodding.
Yeah, the gift that keeps on taking. So it's, no, I think a similar view. At the same time, you look at what's happening. Jean Pierre's already talked, very briefly about, what's happening in the Middle East and kind of the fluctuations that you feel there. But if you look at the inventory drawdowns, if you look at potentially the production that's coming out of some of the Gulf production facilities in Louisiana because of weather events and that, you would have expected the oil price to be lifting at this stage, and it just isn't. It's very, very subdued, and part of the reason for that is real concerns around global growth and a slowdown in global growth. But also, there's been reports out that say that Saudi Arabia could be potentially abandoning its $100 oil targets. And that means those output cuts that they've been putting through may be reduced, and then we could see oil prices a lot lower. And given the kind of internal challenges that Sasol faces, I would hate to imagine what that share price is going to go through. If we return to an environment that is actually not that long ago, where we were approaching tank tops, where suddenly global growth was constrained, and we had Russia and Saudi Arabia deciding to turn on the taps, and we literally didn't have enough place to store oil. And oil in certain contracts in the US actually traded negative, so this is not beyond the realm of possibility, although I think textbooks a few years ago might have said it was. And I think with that kind of single commodity exposure that Sasol has, even though, as Jean Pierre was saying, I mean, they did, through the Lake Charles project, try and diversify their base. Again, also environmental concerns. I believe Secunda is the single biggest endpoint producer of carbon in the world. I mean, that's not a title you want to hang around your neck when you're trying to get to carbon neutrality by 2050. So yeah, very, very scary. Scary position to be in. At the moment, we haven't been sending out ideas on Sasol. We've been kind of steering clear of it as well, waiting for a bottom if it comes. And I think also significant risk to this business. This isn't an oil major. This is not going and buying something like Exxon or BP or Shell. You're buying a South African business that has already been through the ringer and now could potentially face some macro challenges as well.
Talking about positions, JP, specific question. What's your latest pairs trade?
Ooh, a pairs trade. That's an interesting one. Sure, you're putting me on the spot here. I would say that there are some retailers that I like and some that I think are a bit fuller. I'll give you, I'll just say a basket of retailers that are relatively cheap on the long side, and there are some retailers in the same line, whether clothing or food, that you can then short, not because they are necessarily bad businesses, but because they are a lot more expensive relative to the ones you go long. So I would say the retail sector at the moment has got ripe pickings for pair trades.
All right, cool. Well, talking about ripe pickings, let's go into your stock picks for today. Gary, what are you choosing?
I'm going to go with Glencore. So Glencore, diversified miner, obviously very, very exposed to China. China, I think, probably a customer for just about every product that Glencore creates. So with the stimulus measures that we heard announced last week, this should be incredibly positive for Glencore as a stock. I actually put out the stock pick for the JSE recently. There we were saying buy at 86. It was just call it 86.5. If you look at the targets, there's a beautiful technical range that you can trade between 80, probably 80 and about 120. We're currently at 98 at the moment, but I still think there's some legs on this trade. Most of the big banks, the likes of RBC, have, this is obviously listed in London as well. They've got targets about £5.40. Deutsche has got a target of around £5. Stock at the moment closed today. I mean, we were buying it at £3.70, but trading at £4.29 at the moment. But I think there's still legs on this, and why Glencore versus like an Anglo-American or a BHP? I think one of the reasons is their marketing business, which does give it a little bit of a moat because I suppose commodity companies just don't have moats almost by definition, or actually by definition. But the idea of them being a global commodity trader, they're a little bit more intelligent, I think, around the commodity exposure that they manage to get and the services that they manage to give, which gives a little bit more strength to the company overall. Not particularly expensive, but of course, great if commodities recover. It's going to be terrible if commodities turn around and decide to slide based on global growth concerns.
All right. JP, let's get to your stock pick for today.
So, Zenati, I'm picking a global stock pick, one that's listed in the US, but its operations are in Kazakhstan, of all places. The company's name is Kaspi, and a few years ago they were a financial services business, banking and loans, and then they diversified into payments, and they did very well in terms of taking people in Kazakhstan away from cash-based payments to cards and QR codes and peer-to-peer cell phone payments. Then they became quite dominant in the payments industry in Kazakhstan, and then they diversified into e-commerce, created a marketplace to link buyers and sellers of all kinds of products, almost like Call It Take A Lot in South Africa. So what they have today is a whole ecosystem of financial services, of the marketplace, of payments, and they are the leading provider of these services in Kazakhstan. And a week or two ago, there was a short seller who came out saying very negative things about Kaspi, including that they allow Russians to use the platform and get their rubles out of Russia. The company has refuted that, and it does seem like it is so that the company does not allow Russians to do that. Maybe Russians that are in Kazakhstan, but not Russians that have rubles that are still in Russia. And that means that with the drop in the share price after the short seller, who I disagree with, you now have an opportunity to buy Kaspi at a very cheap price with very strong growth prospects and a very dominant position in these three lines of business in Kazakhstan. So that's my stock pick tonight.
Interesting. Thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Jean Pierre Verster from Protea Capital Management and Gary Booysen from Rand Swiss. Up next, The Close. Stay tuned.
Thank you.